Hello Luciana, my name is Suprema Varal, student ID EMB 21616, and today I'm here in front of you with my all of the team members, group members actually, and representing in front of you with the group presentations, international implication of international accounting after IFRS period. So here are all my group members.
Hi, I'm Navjot Singh.
Hello, I'm Runa Gautam.
Hi Luciana, my name is Navneet.
Hi Luciana, I'm Mohammed Shahidullah Raki.
So going back to the presentation, we've got implication of international accounting in Australia after IFRS periods. We've got some plan for the presentations, starting with introductions, then following by major implication of international accounting in Australia, in which we've got some of the major points: accounting for intangibles, accounting for leases, revenue recognition issue, accounting for employees' benefits, followed by alignment with the international accounting topic of unit, conclusion and references. So going back to the introductions, we have highlighted some major points. Adopt the financial reporting standards in the year 2002, suggested by Financial Reporting Council FRS. The council highlighted that this would help in improving the quality of reporting. Australian Accounting Standard Board AASB has also backed this idea. Implications of the IFRS could bring in material changes to the current procedure of reporting, and followed by the following study for standards are involved, which are, as I already mentioned as well, accounting for intangibles, accounting for leases, revenue recognition issues, and accounting for employees' benefits. So I've got one implication for the accounting for intangibles, and we've somehow described it in a 1, 2, 3, 4 basic points. So going through it, in Australia, the main standard of non-configurable resources were presented as AASB 18 entitled Goodwill. It was then tested by ASRB 2013 since 1988, as the past AAS 18 had some problems regarding the recognition of unchallenged resources. In 2005, Australia adopted the International Financial Reporting Standards, IFRS, taking into account the ultimate goal of improving the similarity of accounting throughout the world. Despite the fact that basic thinking and representation of non-comparable resources can be compared in AASB and IAS, there are some huge contradictions that have been examined as to offer. So I have now completed my part, so I'm going to continue with
To following Suprema, there are some major implications. Before that, according to AASB 138, we need to know how to classify your assets can be important for tax and other purposes. There are the process of consideration. The first one is identifiable, the second one is non-monetary, the third one is lacking of physical substances, the fourth one is control, and the last one future economic for benefits. In identifiable, it can be separated from the company or arise from contract. And the second one, non-monetary. Monetary assets are anything you would receive that can be valued in dollar terms. And lacking of physical substances, some assets which we can't touch, they are coming to the lacking of physical substances. In the control, the assets we can control to them. And for example, there are some examples like patents, license, software, copyrights. We can control these type of assets. To be continuing major implications, there is one implication is related to the accounting for lease. According to the Financial Accounting Standard Board 117, classifies the tenants and lease either of operating or for financial lease, but the exemption to refer the wages significantly lower than 12 months. And now one of my friend is going to be continuing about the major implications.
Yeah, in following Navjot, and I'm going to continue some of the major implications. And there are two companies, ABC head companies on the left hand side, while on the right hand side I have got XYZ company, and there is a cycle given, and both are contributed $100 capital, and ABC company head company has got leisure company, and the XYZ company has got leasing company. In ABC head company, there are asset liabilities called plant, right to receive lease payments, and while on the XYZ head company, there are asset liabilities which are lease asset, cash contributed to capital, and lease liability. And in continuous to this, I have got another major implications, and which are related to the revenue recognition issues, and that have been divided into 5 actions. They are: identify the contract with the consumer, and creation of performance obligations under the contract, calculate the total cost of the purchase, spend the purchase cost on all performance obligations, and determine the income where each performance obligation has been achieved. Thank you very much, and my friend Navneet is going to continue after me. Thank you.
By following my friend Runa, I have a major application which will be I continue. That one is related with the disclosure requirements, and this one is depend on the understand nature, amount, timing, uncertainty of revenue and cash flows, and all these things are depend on the performance obligations, significant judgment, contract balances, disaggregation of revenue, and the last one is cost to obtain or fulfill a contract. And the other one is the implication, that one is related to the employee benefits. This one has 2 points. The one is the surplus within the defined utility strategy, where the AASB 119 is added to the significance, which has a difference between the current price and the defined profit and the liability and fair value of the assets, and all are depend in the accordance of the amended AASB 119 standard, which has a responsibility for determining the benefit listed on the total amount, which was determined by the definite benefit strategy and the potential impact of the characteristic saving. So my next friend Rakib will be continuing this one.
Hi, after Navanita, I'm gonna represent my segment in our assignments. I hope we have a line graph. The name is measure implication and percentage of respondents who said the benefit would be taken into the consideration. There is two major part. One is heavy consideration and another one is some consideration. What is very noticeable in our line graph, the first of most important is 80% of the better health, dental and vision insurance, which is heavy consideration is greater than the some consideration. Following that is the another most important important part is more flexible hour is the really important, because 88% is all together, and in this segment some consideration is greater than heavy consideration. Following that, another important is free gym membership. This is the totally reverse of the other two things. There is much more greater than in some consideration than the heavy consideration. Following that, the least one is team bonding events. It's only 20% of this graph and very less in heavy consideration. So in our assignment, we got alignment with the international accounting topics of unit. There is 4 unit. First of all, revenue recognition issue, second accounting for employee benefit, and third accounting for leases, and fourth accounting for intangibles. So this is our presentation. Thank you very much. Thanks a lot.
Thank you very much.
Thank you
and
so
have a good
much.
day. Have a good day. Bye.